Okay, so we've got this pretty wild story developing in the Bitcoin markets, and I think it's worth a deep dive. You've probably seen the headlines by now. A Bitcoin whale just dropped a huge short position, like a $368 million bet that Bitcoin's price is going down.
Yeah, I saw that. I mean, anytime you see that kind of money on the line, you got to wonder, what do they know that we don't? Like, what's making them so sure Bitcoin is going to tank?
Exactly. And the thing is, this isn't just some casual, I think Bitcoin has gone down a little kind of trade. This is a seriously leveraged play. They're using like 40x leverage.
Oh, wow, 40x. So that means, for
Yeah.
those who aren't familiar with leverage, it basically means they're amplifying their potential gains and losses by borrowing a ton of capital. So they're putting down a relatively small amount of their own money, but if they're wrong, they could get absolutely wrecked.
Exactly. It's a high risk, high reward kind of situation. So let's break this down a bit further, right? We're talking about 4,442 Bitcoin that this whale put down as collateral, which at their entry price of $84,043 per Bitcoin, well, that comes out to that massive $368 million position we're talking about.
I see, okay. And so what's their liquidation price? Like, at what point does this whole house of cards come crashing down?
Right, so that's the crazy part. Their liquidation price is just a little over $85,592. If Bitcoin climbs even a tiny bit higher than that, boom, they get liquidated. The exchange automatically closes their position, and they're forced to take a huge loss.
Oof. Yeah, that's cutting it pretty close. But hey, at least they're in profit right now, right? That's how they were up a couple million bucks.
Yeah, true. They are sitting on about $2 million in unrealized profit at the moment. But here's the catch. Holding this kind of leveraged short position isn't free. They're racking up over $200,000 in funding fees every day.
Ah, funding fees.
Right.
Look at like a rental fee you pay for borrowing the capital to keep your short position open.
Exactly. So even though they're showing a paper profit that's bleeding away every single day, the clock is definitely ticking for this whale.
So it's a real race against time. And to make matters even more interesting, we've got a whole bunch of key economic data and events coming out this week, including the FOMC meeting on March 19th.
Yeah, the markets are going to be on edge watching how that all plays out. We know Bitcoin especially is super sensitive to things like interest rate changes and inflation reports. Any unexpected news could send the price on a wild ride.
Absolutely. I mean, Bitcoin is considered, kind of a risky asset. So when investors get nervous about the broader economy, they tend to pull back from those riskier investments, and Bitcoin often takes a hit.
Right. And that's why all eyes are on people like Ryan Lee, the chief analyst at Big Get Research. He's laid out some pretty clear levels to watch, specifically for the weekly close. He says $81,000 is a key support level. If Bitcoin can hold above that, it suggests there's still some underlying strength in the market, even with this whale betting against it.
Yeah, 81,000. Okay, that makes sense. But what if it breaks below that? What's the next level he's watching?
Well, he says if Bitcoin drops below 76,000, that could be a really bad sign. It could trigger a cascade of selling, with more traders piling on, pushing the price down even further.
Yeah, it's almost like those price levels become these self-fulfilling prophecies, right?
Yeah.
If enough traders believe a certain level is significant, their actions can actually make it so.
Absolutely. It's all about market psychology. Now, as far as the FOMC goes, the general expectation is that the Fed will keep interest rates steady this time around. I think CME Group's FedWatch tool is putting the odds at like 98%.
Yeah, that seems to be the consensus. But, even if they hold rates steady, the real wild card is the language they use, right? Like any hints about future rate hikes, anything that sounds even a little bit hawkish, well, that could spook the markets and send Bitcoin tumbling.
Yeah, no doubt. The market hates uncertainty. But here's where things get really interesting. And this is something you wouldn't see in traditional finance. So, word of this whale's massive short position has spread like wildfire on crypto Twitter.
Crypto Twitter, haha. Yeah, of course it has. What are they saying?
Well, instead of panicking or, just accepting the whale's bet as some kind of inevitable outcome, a bunch of traders have basically decided to fight back.
Wait, fight back? What do you mean? Like, they're just going to buy Bitcoin to push the price up?
Yep, that's exactly what they're doing. They're trying to force the whale into liquidation by pumping the price up past that $85,592 mark. The hashtags #SendDateTow86K and Wreck the Whale are trending all over the place.
Wow, it's like a financial flash mob. I mean, it's kind of crazy to think that a bunch of random people on Twitter could actually move the market enough to take down a whale like that.
Right. It's like a real-life David versus Goliath story playing out in the crypto markets. And it really highlights the power of community and, the decentralized nature of crypto. You wouldn't see this kind of coordinated action in traditional finance.
Yeah, that's for sure. So what are the potential outcomes here? Like, what happens if they succeed? What if they fail?
Okay, so let's game it out right. Scenario one, they win. Bitcoin hits that $85,592 mark. The whale gets liquidated. What happens then?
Well, when the whale gets liquidated, the exchange has to buy a ton of Bitcoin to cover the whale's position. That huge surge in buy orders is basically going to launch the price even higher, maybe even up past 90,000.
And that's what they call a short squeeze, right? All those people betting against Bitcoin are suddenly scrambling to buy it back to cut their losses, pushing the price up even faster in this crazy feedback loop.
Exactly. And if this happens, it'll be a huge victory for the little guys. It'll
Yeah.
show that even the biggest whales can get taken down if enough people band together. And it could also scare off other whales from making similar bets in the future.
Okay, so scenario two. The Bitcoin pump fizzles out, maybe the price stalls, maybe it even dips back down, and the whale ends up closing their position at a profit, even after all those funding fees. What does that mean for the market?
Hmm. Well, if the whale walks away with a win,
Mm.
it could actually encourage more of these risky leverage trades in the future. Other big players might see that and think, hey, if they can do it, so can I. And that could lead to even more volatility in the market.
Yeah, because it basically proves that this strategy can work. And that leads to some pretty big questions, doesn't it? Like, was this whale just incredibly smart and lucky? Did they have some insider information that gave them an edge? Or was it just a reckless gamble that paid off?
Right. And if a single whale can make such a massive profit from a short-term bet like this, what does that say about the overall maturity of the crypto market? Is it really efficient, or is it still easily manipulated by a few big players?
These are the kind of questions you have to grapple with if you're in this space. And it's a reminder that crypto is still a very young and unpredictable market. You've got to be aware of the risks involved, especially with leverage.
For sure. But, on the flip side, it also shows the incredible potential of crypto. The fact that a bunch of people on Twitter can coordinate to challenge a whale with millions of dollars, that's pretty amazing.
No doubt about it. It's a wild ride, but that's part of what makes it so exciting.
Absolutely. And for anyone listening, I think this whole situation really highlights the power of community in crypto and the impact that macroeconomics can have on the market.
So the big question I'll leave you with is this. What does the growing prevalence of these really public, high-stakes trades tell us about the future of crypto? Is this a sign that the market is maturing, or are we just headed for even more wild swings and speculation? It's definitely something to keep thinking about.
For sure. And, it's not just about this one whale or this one trade. It's about the bigger trends that are shaping the crypto landscape. So stay informed, stay engaged, and buckle up because this ride is far from over.